for the day, right? Accumulation, distribution, and manipulation, right? Using, now look at this. Let me candle type bars, right? For yesterday, for yesterday, the market opened at this price. Market opened at this price. Of course, did a little manipulation, moved, distributed, then closed, right? It's just the power of three, okay? Accumulation, manipulation, and distribution, right? So sometime, in fact, most of the times, right, this is how the market operates, yeah? Towards the end of the day or towards the end of a trading day, right? The market tends to draw back into the trading range before closing. Market tends to draw back into the trading range before closing, right? At the start of the day, it manipulates, gives you an idea that, okay, it seems as though I'm going up. But knowing this will tell you that, this is not actually what the market is about to do, right? It's not actually what the market is about to do. It's just to manipulate and not make the main move and, of course, close. And as you can see here, it targeted basically Thursday's low, right? Thursday's low and close back above it within the range, right? So if you have an idea of this, if you get to understand this, it will help you, like for real. If you get to understand this, it will help you for real, right? So let's get back to these are the bars, right? The power of three is going to help. So for today, what are we saying? For today, what are we saying? Let's get back to maybe here. So for today, wait, you can hear me, right? I want to be sure. Can you hear me? Okay, all right. So for today, so for today, now, here's a daily bias right now. The market has started off. We've seen a little manipulation already. Now, looking at this from the higher time frame, I'll be expecting the market, right? Today is Friday, end of the week. If not, my target will be this low. Okay, I can take out this stuff, right? My target will be the low end of the range or the low of today is what? Monday. If it will get to this low today, amazing. But generally, I'm expecting a bullish market, right? Because there is no there's nothing, the imbalance I'm seeing here are above the range, not below. All right. The market has taken out this low, right? And reacted with this low over here. So generally, this is actually a very good point. It broke down like crazily. The same thing happened on gold yesterday. It was a messed up market anyway, but all the same, right? So what am I expecting the market to pull back up, do a little correction before next week, right? Because I don't know how the outlook is going to be for next week. USD has been gaining a little strength. If you check the dollar index, you're going to see that dollar has been gaining strength over the past few days against the crazy drop from 1st of October, actually, 1st of August, right? Throughout August and up until 17th September, gold has been trending downwards. And you can see this is an uptrend, a low. The last high here has been broken. So we're expecting the dollar, if everything goes well for it, to head back to this zone, right? So perhaps we'll be seeing from next month, right? most of the high impact news perhaps might be in favor of dollar. Um, for throughout September, most of the news were against dollar. If you notice, most everything were against dollar. That's why you're seeing this move throughout September and of course August, right? So if things go the way it's supposed to go, if this high here is broken, perhaps, then October will be a bullish month for the dollar, right? So, and in turn, we're going to be expecting more sales, right? Bearish momentum for the euro dollar, the pound sterling, and that's the GBP USD, and of course, the rest of the pairs. Okay. So for today, I'm expecting, a little bullish momentum in this area. Now, to compare that to the dollar index, you can see, yeah, looking at this here, this is like, what are you seeing here? This a resistance for the dollar index. So looking at this normally, you say, okay, you expect the market to pull back into this area or this area here before going back up. This is a resistance. This is a resistance zone. I can throw out everything. This is a resistance zone. And the dollar has hit this resistance zone, right? So to keep pushing up, and this is on the daily time frame, right? The market hasn't broken this resistance since August, right? So to break this area, a pullback is expected, right, before breaking. So this is how to determine your daily bias. And as you are seeing it here, the opposite is what is happening on the opposite. The opposite is what is happening on, let's say, okay, let's add it so you just see. Not this way, man. Not this way, not this way, not this way, not this way, not this way. Not this way, not this way, not this way, not this way, not this way. I wanted to add something, but not like this, right? But the opposite is what is happening here. I wanted to, I've done that before, but I don't know why. So let's go back to Euro USD. Right? So the same thing Euro USD, we are having an area of equal low, right? Expecting the market to get back to this area. So we've created our daily bias that we're expecting a buy momentum to this point. And now, remember what I showed us earlier, the power of three, right? The accumulation, manipulation, distribution, and of course, that. So let's go down to, let me mark out this area so that we'll have a target area right here. Just focus it just on this guy. So this is where you're looking at. So let me go down to 15 minutes, or let's say the 1 hour. Right. So my concern now is to know when the market open. Like for today, we are working with London time, right? Our time basically. So our 12 a.m. is actually this. This is our 12 a.m. and the markets pull down a little bit before going up, right? Next thing, what I would expect, right? So this pulling down is actually, it will make more sense if you go down to the 15 minutes time frame. You see that, okay, the market actually pulled the opposite way before making this move now, right? Now, another thing I'll expect this market to do is just at the opening, that's by 8, the equity market opening by 8 a.m., right? I would expect the market to pull down more, right? Just to align with that rule, the power of three, right? Just to, what he's doing basically is to take out the lows of presence. Yeah, that's a manipulation, right? I would want that to confirm the buy move I'm anticipating. Looking at this here, this is a clear, massive imbalance, right? So this also aligns with the idea we're looking at. Today is going to be a bullish day, right? But before that, we need multiple confirmations before we're going for that, right? So I'm telling you what I'm expecting of the market to do by open, right? So by 8 a.m., I would expect a bearish move, then of course, the real move. Okay, so let's see the 15 minutes time frame. Where did the market open? Uh, okay, yeah, open at this point, need a little pullback, started moving. So by 8 a.m., I'm expecting another pullback, right, before the move. Now, let's use the previous day. Let's work with the previous day. Let's work with the previous day. Today is what? Thursday. Let's work with the opening of Thursday. Thursday was a bearish day. Let's see, yeah, if Thursday actually gave us what we expected, right? So Thursday opened at this particular point. What did you see? The market tilted upwards, right? Before selling, right? The market tilted upwards before selling. If you can remember, I told you the power of three, if it's going to, there needs to be a, what's it called? A manipulation first, right? Before, what the heck, man? There needs to be a manipulation first before the main move, right? It's always like this. Then when it closes, right? It's always this way. It's always this way. So seeing this will help. So let's go back to this. What's that point? Market open here. I think I can mark it out so that you can see. Okay. Market open at this point. All right. What happened next? I have a tilt in the market around here. So I want to show, let's see what happened around 8, the market opening. So 8 a.m. as well, the market opened here. This is the equity market opening, official market opening. The market opened here. What's similar with this? The market tilting upwards before selling, right? Tilting upwards before selling. If I go here, even went up even more, right? So now, if you're looking for, since you've already determined that your daily bias is a sell, like you're looking for a sell this particular day, getting entries above these two opens here are key levels for you. Getting entries at this open, right, are very, very key areas for you because it's just like you are getting it at a discount price. Okay, you're selling at a premium basically. You're selling at a premium price, right? You are getting it around the best. And if you can see here, this is like the high of the day. The market didn't come back here till the day ended, right? So let's say you did this because you've done your analysis. You're like, you know what? Let me get my next reaction. There is no clear fair value gap here anyway. There's no clear fair value gap here. The market kept respecting this high. Let me mark that out as well. Market kept respecting this high. Remember, this is a 15 minutes time frame. So what am I going to do? I'll patiently wait, right, until I see a clear FVG, right? So the fair value gap I was able to get here, a clear fair value gap I was able to get was around 1 p.m., right? And that's between and dish, right? This FVG right here between this and this. Other market will have a first reaction, second reaction. And of course, if you're entering here, your stop loss should be either above this zone or above the candle that gave you the fair value gap. Right? If you look through, there's no other clear fair value gap when the market opened, even from what's it called? From midnight, right? There's no other clear fair value gap. The market has just been moving mad, right? So this is the only clear fair value gap. And what happened next? Crazy mark. Of course, you have your TP zone, wherever the zone is, right? And that's the next thing I want to talk about here, right? Over time, as you get better in this business, perhaps in business of trading, you get to know what your style of trading, what you can accumulate, right? Are you more like a swing trader that can aim for 400, 500 pips? Are you the type that aims for just 50, 60 pips? Do your strategy, your strategy get to reverse after hitting 50, 60 pips, right? Because if you, over time, you can do this practice here is for your demo, right? Over time, if you notice that, okay, I'm able to catch 50, 60 pips, then if I leave the trade running, the market gets to reverse on me, either via break even or having my stop loss kissed, right? If you get to notice that, in fact, sometimes this happens in a particular season. In a particular season, your market keeps hitting, what's it called? Just 50 pips, 50 pips to reverse, 50 pips to reverse, 50 pips to reverse. Not like it wouldn't make the main move you're looking at, but it's going to delay first. In fact, it's going to take you out like multiple times before making that move. If you notice that, the best bet is to start aiming for 50, 60 pips. Take your tip, take your profit and chill, right? There's no need aiming for 150, 200 when your strategy at the time only accumulates 50 pips. All right. Now, if you see that 50, 60 pips are not your thing, right? Let's say um with the 50 pips perhaps, the market doesn't really give you what you want. It delays or takes you out very early, right? Then when you target a higher zone, you have a healthier stop loss, right? Have a reduced risk to accumulate that stop loss, right? Imagine someone, how am I going to do that? Let's say, how am I going to, I want to do some, I want to imagine someone, i- see, you're targeting, let's say you got this entry at on your 1 minute time frame and you're targeting somewhere around here and you're risking 1:4, right? Your risk, perhaps, your stop loss will be like 4, 5 pips, right? Because you're aiming for a very short, let's say you're aiming for 20 pips or 30 pips, right? The best example is Coach Michael's trades. He doesn't aim for 700 pips, 500 pips, 100. You see, TP2, 20 pips. That's all. CP2, 20 pips, 15 pips, right? 25 pips. We stop loss of 5 pips, right? With that, he stacks his position to hit that. No more, no less, right? So if you observe your strategy and know what you're looking for. Now, if yours is a type that aims for, let's say, a higher number of pips as your TP, then your stop loss can't just be 5 pips. You should have about 20 pips as a stop loss. If you're aiming 60 pips, at least, let's say that's 1:3 risk to reward. If you're aiming 80 pips, you should have a healthy stop loss of about 20 thereabout. If you're aiming for 100, have a healthy stop loss about 30 thereabout. Because your stop loss of 30 is someone's take profits. All right. So all these are how you manage your trade and understand what works for you over time. Because I know for a fact, just imagine within a short period of time, very, very soon, you start analyzing for yourself and start seeing taking these trades yourself, right? Because you won't forever depend on signals. No, practice on your own and you get better, right? So looking at this, the only clear fair value gap I could see happened right here, right? First off, I would have entered here. Of course, that's my main point. And the market will come back into my zone. Still, I wasn't taken out. I'll just get the heat of the market that's around my stop loss area, right? Then, of course, what do we catch here? Crazy amount of points. Let's say you entered entered at this tip and your stop loss just above here. Above here gives you 11 pips, right? Let's say you're risking 1:4. What is that? So they're giving you 44 pips against 11 pips stop loss. And the market didn't actually get your entry at all, right? And this happened just in the space of 1, 2, 3. The space of 1 hour. You hit your TP and you're out, right? In fact, this is also around very close to um, um, New York opening, right? And there's a whole lot of volatility happening at that time. Right? So you can see how you waited okay, you waited from market opening throughout the early hours of the morning. You didn't see any entry and you got in here. Now, if you're using the box wave strategy, perhaps you might have gotten some entries here. 20 pips move, cleared, the market kept on reacting at this particular point. You sell, it comes back again, you sell, right? So there are so many. Main thing is that thing that works for you, use it, right? Use it. Okay. So now let's not deviate from why I started this. I started this to tell you that before a market makes any particular move, it goes the opposite way first. Just to take out old highs. What was happening to my charts? My item. So sorry about that. So sorry about that. My router just went off. I don't know, network just got disconnected, but we're back on. Sorry about that for me. All right. So all I'm saying is before, and if you can see, okay, this was for yesterday. This was just half the move that happened yesterday. This was just half the move. Imagine you just targeted it and you're good. So if you're more of the range, long range trader, yeah, you have, let's say, a stop loss, or let's say you want to risk like 20 pips, targeting 80. You're still good before the day runs out. This is by 6 p.m. That's towards the end of the market, towards the end of um UK UK market, right? You hit your TP. Now, what happened here? Just at that point, at the close of the day, what the market started doing is started pulling back into the trading range, right? It hit the low of the day and started going back in, right? So what you wouldn't want to do for yourself is to start looking for lower lows, yeah, towards the end of the day. Because what happens towards the end of the day, the market starts going back. Now, the thing is, know the market you trade. That's over time, you get to know, I trade just UK, I trade just US or New York, I trade just Asian session, right? So when you see some market behaviors on tendencies, you know that, okay, this is expected because of this particular time. All right, this is expected because of this particular time. If I switch to New York time, you're going to see towards the end of the day, around 4, 5 p.m., you see the market start pulling back into the trading range because the day has ended, waiting for a new move for the next day, right? So that is it. So just like this happened for today, let me mark the open of today as well. Or just like this happens for yesterday, let me mark the open of today as well so that we can see. Open was here. Yeah, maybe this seems to be wide now. The open was here. I see something similar here. Open, a little pullback, open, a little downward movement. So I'm waiting for it Once it's 8 o'clock, right? I will expect the market to go down as well before. This is you anticipate. This is what I'm anticipating in the market. Perhaps the market might not go my way, but this is what I'm anticipating based off what the chart is telling me, based off the pattern I'm seeing, based off the power of three, right? Based off the power of three. Okay. Like on gold, I was anticipating gold to hit all-time high, perhaps, or hit its previous high yesterday, but it didn't. It just got halfway and started reversing. In fact, the news by 1:30 yesterday just missed. I was long on gold. I was even there with the trade, hoping that the news will help take it my way, but then I got spiked out on that. All right. So this is how you use the daily bias to determine your move. So let us also work on the previous day to see if the same thing happened. This from Wednesday, all right? So let's see Wednesday. This is the open of Wednesday down here, right? Markets, oh, then the market tilted up a little bit. Let's see what happened after 8 o'clock. If we notice any upward movement before they sell, this 8 o'clock, right? This 8 o'clock. What happened at 8 o'clock? The market moved the opposite way, right? So imagine you got a very good entry here. This is it, right? In fact, let's see if we can get a good entry here. Let's see if we can get a clear fair value gap move within this area before this move actually happened. Let's see if we can. So what I will need to, this makes sense if you had me. Why are you seeing it, right? Before the main move, there's always a negative movement. There's always a negative movement or movement towards the opposite direction before the move. So for this particular one, let me see if I can get a, let me see if I can get something interesting right here. So I'm only interested after the opening. I have a few minutes here, but let's see. Can get a clear fair gap. Good entry right here. This is the 8 o'clock, right? This is 8 o'clock. Okay, you open right here. Do a little move. I'm looking for fair gaps, but if you want to bank on double top, right? If you decide to bank on double top, this is it. If you want to bank on double top, this is a clear cut entry, right? This is a clear cut entry. This is a clear cut entry. If you want to bank on double top, this is so clear, right? So let's still go down to 1 minute. I just pray to give me this. This okay, no, get to no, I was working on Wednesday. I think this won't take me back exactly to a month, but took me somewhere else. We have a few minutes here. So okay, this is where we are. All right. Let's see. Okay. So remember, we're looking for a fair value gap to see if we can get one this area. So what are we seeing here? On the 1 minute time frame, voila. Are you patient enough to see this? Voila. In that crazy messed up market here, we're able to see this. Imagine seeing this as a confirmation, then this as a second confirmation. If apart from this, I think you get to still see other multiples. So far, this is the closest to my interest zone that I'm seeing. You get in here at this tip, right? Have your stop loss way above this high so you don't get spiked out. Then, of course, targets They just 4 pips there. Can even have it, you can keep it at 5 or 10 pips, just for the case you target 40 pips. You're good. You get 40 pips downwards. Just to make it 1:4. I said, okay. All right. Extend. Let's not go down to 5 minutes. Oh God. All right. It will take enough time. Just by just by 11 a.m. you hit your TP for the day and you're done. You're out of the market. The market didn't even play around your entry. Sorry, your stop loss zone at all until the market hit your TP. Right? If you're aiming for longer trade here, you might want to have your, let's say you are that crazy here. We had 11 pips stop loss, right? You're aiming for you're aiming for this base. Give it time to get there. So everything is in the analysis. You can see how everything here we are showing aligned with what you are looking for, right? So that is basically it about determining your move from a daily bias, merging it with the power of three, accumulation, distribution, and manipulation, right? Or accumulation, manipulation, and distribution. Well, that's actually the pattern, right? Accumulation, manipulation, and distribution. Hope did it make sense? Let's not just be I've just been talking. Did it make sense to us? Did it make sense? Did it make sense? Did it make sense? Did it make sense? All right. You can see that of we did Wednesday. I see market opened, manipulated a little bit, right? Before selling. The same thing happened on Thursday. The market opened, manipulated, sold. Friday, market opened, manipulated, and we are anticipating a move upward. That's it. It's everywhere. That's the power of three. If you're able to see this. And one thing here, don't use the daily open. Like don't go to the daily time frame and mark this as the open. I tell you, if you go down to a lower time frame, these points might be different, right? So what you're banking with is the exact time the market opened, 12 a.m. of that lower time frame you're looking at. Use that as your analysis. Don't bank on. But if you look at the daily time frame, you see the move at the end of the day, right? Everywhere. That is it. Open, manipulate, close, right? Open, manipulate, close, then come down. Open. If the market hits the low of the day, just don't. We'll get better over time. We'll get better over time. We'll get better over time. So, family, that's is it for today. So, of course, next week we'll break down this even more, right? So, remember, use proper risk management when taking your trades. Don't rush. Don't rush. Everything will keep on making sense over time. They'll keep on making sense and they keep on making sense. Let's keep bagging. Of course, we're entering a new mood. So we have the NFP waiting for us on the first Friday of October. So let's pray it's going to go well. An opportunity to make crazy money. All right. Certainly, 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 it's going to get better. So one of the best ways to actually assimilate all of this is I'll send a recorded session one, then is to try it, right? Try it, see it, do personal practice, see it on your own. All right, family, have a blessed day. Let's see how this market plays out for today. All right, cheers.